obviously, the last 3 months of Fed loosening in terms of the balance sheet has actually been a part of that, and I think it's an underappreciated contributor, because most folks right now are sort of focused on the fact that we're heading into earnings seasons, and they've been good. The reason that banks are doing so well is because the Fed has effectively created the right shape of the yield curve by pushing down the short end so that the long end is now above the short end. But that really was a determined effort. And it does set up the banks for profitability, and I think that they are going to continue to be profitable. But, you still have, and you have also, this phase one trade deal does remove some uncertainty from the markets, but not all of it. I think you have to really dig into these issues. There are still a lot of issues that remain to be resolved.
What kind of issues are first and foremost in front of mind for you, Gina?
Well, if you look at the trade deal itself, I think the main thing that the trade deal accomplishes is that it removes the hostility, some of the hostility between, the two countries. So you have the U.S., Treasury Department will no longer be labeling China as a currency manipulator. That's a big win for China. Now, China has agreed to purchase $40 billion of agricultural goods. That's a win, but I'm not sure what they're going to do with all of those agricultural goods, as they've never purchased more than $26 billion. But the problem is that the actual deal is silent right now on a lot of other issues, including protection for IP, including reforms to subsidies that are granted to state-owned enterprises in China, which create competitiveness issues. And so until those really thorny issues are dealt with, we still don't know what we're dealing with.
All right, let's say that those issues are addressed in the negotiations that are undoubtedly going to happen this year for this phase two trade deal. Let's say those things start to go a little bit on track, hypothetically speaking. What then is the outlook for 2020 if markets have the Fed and other central banks and this phase one trade deal on track? Is there any way you should be fighting that trend upside, or do you think that the pullback is necessary at this stage?
Look, I think that a pullback is necessary just because valuations, you can't grow your way, given where we are in the natural economic cycle. I don't think that we can fulfill the expectations that have been built into this market. And look, once we get past the China trade deal, we're still going to have to deal with Europe. We are picking a trade fight with Europe, both Germany and France. So it's not like there aren't other issues percolating. We seem to be just sort of picking fight after fight. And I just don't see that there is enough growth in the economy to support the kind of growth that's priced into markets right now.